you updates from the world of business. Welcome to Business Incorporated, right here on Channels Television. Here's what we have for you on the program today. Top juries from across Africa end meeting focusing on free trade agreement implementation within the continent. And Kenya is set to double production of milk to 10 billion litres every year. Still talking exports. Cameroon's banana exports declined by 10.9% year-on-year in July. Good afternoon. Welcome to Business Incorporated. Here's what we give you updates from the world of business from around Africa and the world. And we're starting with Africa, looking at the markets now at intraday to see how markets of major markets on the continent are doing at intraday. We start with Egypt and tell you that the numbers there, we'll start with Nigeria, that has lost its positive trend and it's now 0.14% at intraday. There you have it. And South Africa is also in the red, 0.23%. At intraday. We go to that Egypt I talked about earlier and we see it's positive 0.61%. Kenya is, however, 1.17% in the red. That's the number it closed with on Tuesday. We move over to the Middle East and see what's going on there at intraday. We see the numbers right there. Abu Dhabi is in the red, 0.09%. Dubai is in the red, 0.2% at intraday. Looking at other parts on that continent there, I guess we don't have those numbers now. Now let's go to Nigeria. We saw a drop earlier, just a little bit ago. I told you about how the market has, dropped just a little bit, and hopefully it will recover from that by the close of trade. But let's find out the live trading right there at the NGX, the floor of the NGX with Mr. Tajuddin Olayinka, the Chief Executive Officer of Warami Capital and Partners. Mr. Olayinka, thank you so much for your time. Good afternoon.
Good afternoon. It's my pleasure.
So we see that there's been a little bit of drop at intraday, at least when we got those numbers, which was about an hour ago. What's the market looking like now?
It's still in that negative territory. It's actually around 0.23%, drop. Negative at this time. It's actually a normal reaction that we see when market has moved so high and the investors decide to either take profit or wait for new information. So in fact, it's more of a mixed sentiment, because even if you look at the value, it's like the value are not quite encouraging at this time. Quite unlike what we used to have, when by this time we'll have something close to about either 8 or 10 billion naira, value of trade, but we are having much less than that. We show that some investors are actually waiting to see whether there will be new information that will counter, what they saw for most part of last week, especially when public companies released their results, showing that yes, they were badly affected by the the new FX regime in terms of the exchange rate that they have to actually provide for. So these are some of the issues that actually went down on the market.
So, let's look at some of those stocks. GlaxoSmithKline has been top trades since they made that announcement about exiting Nigeria. How's the stock doing at this time?
I think it's still on the. As at the last time I checked it, it's on the high side. It was on bid, but of course some investors decided to take profit. Right now, I think it hasn't really reverse. It's still on the it's on offer now. Some investors are actually taking profit. It moved yesterday and it moved significantly. So some investors are actually booking profit on that particular stock, knowing full well that of course the company is going to exit and nobody knows exactly what the level of profit will be, what price they are going to actually buy back those stocks and compensate their shareholders. So nobody can say exactly what the price will be, but of course traders are actually playing their game around that stock, taking profit, and of course doing bargain hunting on the same stock as well.
Yeah, so, and we still don't, I think we're still awaiting the scheme. The company had said they will submit a scheme to SEC on compensation and payment of capital to shareholders based on their exit.
Yeah, that's the standard practice. They will have to, return capital to what they're going to return. But looking at the books of the company, it shows that there's something significant will still come to shareholders. So that's why some players or some traders are actually taking a bet on that stock.
Yeah, well, everybody wants a share. But how do you see the market closing today?
Given that we haven't seen much activities in terms of volume and value, I know that usually when it happens this way, some investors are waiting in the wind to see whether there'll be turnaround before they come into the market today. So we are still hoping that it might close slightly positive and it might still close slightly negative. It's either way. It could go either way because right now it's still a bit down. But if you look at the value, it shows that there are still some investors or some traders who are still hanging around to see whether they are being turned around so that they can take advantage. So it's a waiting game.
A waiting game, or we don't have to wait for too long because at least by 2:30, 2 o'clock, the market would have closed. But thank you so much for sharing your observations with us, Mr. Tajudeen Olayinka, the Chief Executive Officer of Wyoming Capital and Partners.
Thank you too.
All right, now, so let's move to Europe, where in Berlin, one of the conversations there is that Taiwanese chip maker TSMC is investing €3.5 billion to build a new factory in Germany. The small island nation wants deeper engagement with Europe as countries there look to prop up supply chains that took a beating during the pandemic. To give us details of this plan, we have Cassandra Sons now from Berlin. Hi, Cassandra. Good afternoon. So can you tell us more about this investment deal and what both countries stand to gain?
Thanks for having me. This €3.5 billion deal to build a chip-making factory in the eastern city of Dresden has been in discussion since 2021. Under the deal, it will open in 2027 and have a capacity to make 40,000 300mm sized wafers per month. The chip factory will be TSMC's first in Europe. And the deal is actually a joint venture with auto parts maker Bosch and semiconductor maker Infineon, who are both German companies, by the way, as well as Dutch company NXP. Germany has agreed to pitch in with another €5 billion from the government's Climate and Transformation Fund for the construction, but the European Commission will have the final say on the subsidy funding. And for reference, these are the kinds of wafers that are generally used in the production of devices like transistors and integrated circuits.
And this comes as Taiwan pushes for progress on a bilateral investment agreement with Europe. But what's the barrier? Why is it such a priority for them?
Has been under increasing pressure from China because China claims the island is part of its own territory, but Taiwan has insisted on its own sovereignty. So this plant investment from TSMC is really trying to be portrayed as a sign of goodwill from Taiwan, who wants closer relations between themselves and the EU. But even though conversations for that bilateral investment agreement began in 2015, they've largely been stalled, even as trade between Germany and China, for example, have increased. So Taipei, under some of this pressure, is clearly looking to make allies here. Chip making is a massive part of the Taiwanese economy, but TSMC has also committed to investing $40 billion into a new plant in the U.S. state of Arizona. So even as countries around the world look to onshore technology that is critical to their economies, TSMC and Taiwan are looking to stay a part of those conversations. Let's not forget that TSMC is the world's largest chip maker, and the Taiwanese economy is trade dependent and heavily driven by its competitive manufacturing sector, which does include, to a large degree, electronics.
So what's happening in the market so far?
The big mover on markets today was new data that showed China tipping into deflation, with consumer prices dropping by 0.3% in July, making it the first G20 economy to report deflation since Japan in 2021. So on the back of that news, Asian markets fluctuated, with the mood on the trading floors already a bit glum after another sell-off on Wall Street. Meanwhile, UK shares opened higher on Wednesday, led by Coca-Cola HBC after the bottler's upbeat annual revenue report. And Eurozone banks gained 1.4% after a slump yesterday.
All right, Cassandra Sons, thank you so much for that. Let's talk about the U.S. now, where stock features were high on Wednesday as Wall Street tried to regain its footing following a decline in the previous session. The losses came after Moody's downgrade of several regional banks dampened investor sentiment. Some market participants were concerned the signal could spell more trouble for markets ahead, but others say the pullback is expected given the extraordinary rally in equities this year. Now let's look at the numbers right there. The Dow Jones is in the green, 0.20% at 35,466. The S&P 500 features, remember these are as the market is yet to open, 0.28%, 4,530.75. While for the tech guys, the Nasdaq is 15,400.75 at 0.31% in the green. Well, we have more coming from that, and that will be details of yesterday's trade with Maria Bird, our correspondent in Washington, D.C.
The U.S. stock market closed much lower on Tuesday, as the Dow Jones was down by 0.4%. The S&P 500 was also down by nearly 0.4%, and the heavy tech Nasdaq was down by 0.8%. This is mostly due to the fact that many investors were concerned about the 10 regional banks that were downgraded in the Moody's credit rating. This has caused some concern to see whether or not the health of the financial systems have really recovered from earlier in the year's downward trend. It is also clear that investors are watching to see what will happen with Thursday's July inflation report. It is expected that if it's not positive, we could see interest rate hikes. Investors are watching to see how this week will pan out.
From the U.S. to Asia, where mixed sentiments were noticed today. In China, stocks fell as China's consumer prices slipped into negative territory in July for the first time in 28 months. Mainland Chinese markets were lower with the Shanghai. Okay, let's look at the number right there, starting with the Nikkei 225. It's in the red, 0.53%. It's been in the red for about 3 days now at 32,204.33. Kospi is however in the green, 1.21%, and then Hang Seng Index 0.32% at 90,246.03. Shanghai is in the red. I mean, the area, the region is experiencing not very good data coming from there now. 0.89%. But Australia also follows suit, even deeper at 1.29% in the red. Let's take a break now. When we come back, we'll settle on the African continent. Do you know what we have for you? Well, join us after this break. You're welcome back. Now we're on the African continent, telling you that the Manufacturers Association of Nigeria, MAN, has been speaking on how to explore more opportunities in the African Continental Free Trade Area agreements. That's after, and this prompted a meeting among manufacturers and stakeholders in Lagos, the Nigeria's commercial capital, to deliberate on some of the hurdles and possible solution to exploring these opportunities.
For members,
some manufacturers meet in Lagos to discuss financing options for competitiveness of Nigerian manufacturers under AFTA. Challenges of surging inflation, interest rates, and lack of developed infrastructure have deterred manufacturers from maximizing the opportunities available in AFTA. Recent government policies have also added to their woes.
I think it's a very laudable objective that rates will harmonize. But there are issues. There's a serious backlog of effects that have not been met. So availability is a major challenge, and it continues to create some kind of arbitrary opportunities for those that have funds available. So FX liquidity is a major challenge, and that has significant impact on the cost of doing business. The external reserves may not be sufficient enough to meet even a 9-month import. So again, the more you produce and export, the more that we have FDIs coming to some money is coming to the country to increase our reserves. So manufacturing is just so central to this whole business of growing our economy.
The chairman of the Manufacturers Association of Nigeria has some suggestions that could give soft landing.
Curbing the activities of non-state actors who remain a threat to our sector. 3. Creation of policies that would encourage willing manufacturers to improve on public infrastructures like roads around their area of operation in exchange for tax rebate, just like the federal government has done with Executive Order 3. 4. Provision of lasting solution to the Apapa Tinkan Port Road gridlock. This is a problem that once it looks like it's getting solved, gets compounded again. The Lagos State government will need to liaise with the federal government to resolve the infrastructure and other challenges within the ports area.
The African Continental Free Trade Area, AFTA, was established in 2018 by the African Continental Free Trade Agreement and has the objective to provide broader and deeper economic integration across the continent, as well as attract investment, boost trade, provide better jobs. However, lack of sufficient collaboration as well as infrastructural deficiencies have hindered the maximum benefit of the platform. I'm talking about AFTA. It was part of the conversation as top jurists from across African continent converged on the University of South Africa in Pretoria for the 2023 Annual African Bar Association Conference. The event focused on, once again, the African Continental Free Trade Agreement, with topics including global geopolitics and African alignment's contemporary issues affecting the legal profession on the continent and the African lawyer under AFTA, to name a few. The conference was graced by notable personalities, including Honorable Chief Justice of the Republic of South Africa, Raymond Zondo, and the Chief Justice of the Republic of Sierra Leone, Justice Desmond Edwards. Our South African correspondent, Innocent Semosa, has been there with them and now reports.
The discourse here is centered around building the legal profession in Africa under the African Continental Free Trade Agreement. The conference was hosted by the African Bar Association, AFBA, in partnership with the University of South Africa, UNISA. The Vice-Chancellor of UNISA, Professor Puleng Likambula, advocates for strong institutions in order to address contemporary issues affecting the legal profession in Africa.
It is an opportunity for us to collectively address the importance of transparency in governance, in security, the rule of law, and in shaping Africa's futures. But the question, colleagues, are we creating lawyers or legal practitioners that are committed to advancing Africa's knowledge systems?
We shouldn't come here and make rhetorics and go back home with nothing to write about. A lot has been said about the legal and the intellectual scope, but you permit me look at the political domain, that whatever we will say here, it would only be speeches. If we remain blocked by the barriers called national boundaries, where if we want to leave one African country to a neighboring country, we are subjected to visa conditions which takes us 2 weeks or so.
The Chief Justice of South Africa, Raymond Zondo, cites the role of the judiciary in achieving the African Continental Free Trade Agreement.
There is no specific provision provided for the role and place of the courts. The courts, nevertheless, will deal with certain types of disputes.
While we've had many conferences in attempt to realize AFTA, implementation remains an issue, raising doubts about whether these conversations will result in any actual measures or answers. I chatted with some delegates here, and this is what they said.
I think we have a long way to go in that. Our legal education historically has been paneled after European nations, whether it is the common law system, whether it is the civil law system. And the colonial influences are still very much there. So we need to begin to look at our university curriculum and say, look, if we want to train a lawyer, yes, it's important to have a universal knowledge of law in accordance with common law systems and all that. But how do we import into those training systems the essentials that are rudimentary for countries in Africa? How do we make an African lawyer truly African, be able to hold his own with pride?
But right now, I think that with the level of collaboration globally, looking at Europe, looking at America and the rest of them, how they collaborate effectively, Africa has risen, Africa has woken up. This is the time for us to embrace the future of Africa globally and establish this trend. And that is why the African Bar Association is keen into this, so that lawyers who have capacity to have some of these things enforced will put their voices on it.
Throughout the event, prominent figures and key speakers engaged in discussions to advance the goals of the African Continental Free Trade Agreement. The first day, the conference was rounded off by the presentation from the University of South Africa Choir. From Pretoria, South Africa, Innocent Samos, Channels Television News.
So from South Africa to Kenya, have you ever taken camel milk? Well, the government of Kenya has launched a camel milk processing line as part of a wider plan to increase milk production and transform lives of people. Speaking during the launch of KCC plant, President William Ruto said that milk production will be doubled from 5.2 billion liters to $10 billion liters a year in the next 5 years, and this is to expand opportunities for farmers. He explains that the government will modernize Kenya Cooperative Creamers plant and install milk coolers countrywide so that more milk can be processed. And in Cameroon, still talking exports, banana producers operating in the country say they exported 11.76 tons of agricultural commodity in July this year. This volume is down by 1,439 tons year on year. That's about 10.9% in relative terms. The relative underperformance was mainly because of performance of market leader plantations, which is a subsidiary of French group Campaign. According to statistics compiled by the Cameroon Banana Association, in July 2023, PHP achieved its lowest export volume since 2022. At the same time, it exported just 8,714 tons of bananas in July 2023. That's down 16.54% year on year. This is the second time its export volumes comes below 10,000 tons mark this year, after it recorded 9,761 tons in May this year. That's it on the program today. Thank you so much for being a part of this midweek edition of Business Incorporated. 2 more episodes to go. We'll do it tomorrow. But first, I'll see you at 10 a.m. tomorrow for Business Morning. You have a great day.